Been a very volatile session so far today, and the market is not closed. Nvidia is down about 3.5%. We had massive drop off when we heard about tariffs, and we heard tariffs were being lifted. The market bounced a little bit, but none of that matters. And even where we close today doesn't matter, because what we're going to talk about in this video is the current discount, pretty extreme discount that Nvidia is trading at. Now, for the past couple of months, you guys know that I've been conservatively bullish on Nvidia, which basically means that I'm not going to short, but I'm not going to go long. My main reason for this is that even though we are in a very strong bullish market structure with a very strong uptrend, the buying pressure really has just not been there in multiple months. The way that we can tell is by looking at the indicator at the bottom of your screen called the BX trender. When that indicator is making higher lows into higher highs and turning green, that means that price is going to expand. This happened back here as well as back here, and most recently from September into November. These are the type of areas in which I will be aggressively trading not only Nvidia, but any stock, because the structure is bullish. I'm not fighting against the trend. The stock is trading at a discount, which both Nvidia is meeting both those requirements right now. But on top of that, the third and the final thing is that buying pressure needs to be there. And at this point, we just don't see that confirmed. If we go back to the daily chart, you will see that we are trading right on our smart money zone. Now, this smart money zone is very important because this is normally going to be the lowest point where institutions are going to allow a stock to fall within a market cycle before they buy it up and push the stock up to highs. The reason for this is that institutions want to focus on buying at a discount. They never want to be buying at a premium, and they're never going to be placing orders up here at market highs. Unfortunately, the people placing orders up here within this level is normally going to be retail. We have a course explaining in detail how you can draw these institutional and smart money zones within 30 minutes, but the base way is just by looking at most recent lows, which I have highlighted in white right here at $103, as well as most recent highs. This is going to be up here at $153. If we take a Fibonacci retracement from that low to that high, you will notice that the 0.618 and the 0.76 is going to be our institutional buy zone, and the 0.786 to the 0.826 is going to be our smart money zone. This is very important because in most cases, institutions will purposefully drive the stock through the institutional buy range into the smart money range, tagging everybody out only to find a bottom and have bullish market structure hold, once again pushing the stock back up to highs. Very briefly, you could see that that's what happened back here. If we would have marked this low in April of 24 up to that high in June, we pulled right into the institutional buy range, missed the smart money zone, but then completely recovered. We could go from the recent low here of August 5th up to that high in August 26th. Notice where it pulled back right into the institutional buy zone, and so on. And that's why these ranges are so important, is because if the bullish momentum of the stock market and Nvidia itself is going to continue, it's going to have to hold these key levels. Now, at this point, we have not seen any confirmation of a bottom yet. Normally, what we want to see is price bounce within the smart money zone, but we want to see the BX flip from dark red to light red, much like we saw back there on Monday, September 9th. If that can occur, that's when we could see price start to expand and move its way back up into equal highs, much like we saw back here. Now, what worries me is if we zoom out to the monthly chart, because if you look at all of the other times that these levels held, the monthly chart, the BX was green and it was showing higher highs. The BX unfortunately closed red last month. And the last time it closed red was all the way back here in December of 21, where it downtrended for almost a year. Also back here in September of 2018, when it downtrended for almost a year. Now, there were other times where it flipped red for only a month before a massive breakout, and this could be one of those times. And so with that monthly BX showing red, I do think that the chances of profit here are a little bit lower. Normally, this is like a 70% chance of profit that we're going to bounce. I would say this is still probably about a 60, maybe 55% chance of profit. But if you were to set a stop loss at break of structure and a take profit at higher highs, you're looking right now at least a 2-to-1 risk versus reward. And if this support level of $113 breaks, the next level that this will pull into is going to be $104 to $102. I think one of the best things to do at this point with Nvidia is just focus on selling cash secured puts in the interim, because it will help us make some profits as it's pulling back into both smart money zones. And to be quite honest, if we see a sign of a bottom and I decide to take some call options, I will not be mad if I end up losing, because the risk versus reward on this setup is very strong. But at this point, we need to remain patient. If you want to learn my exact strategy for free, you can take our BX Trender course. The link is down in the description. We also have 11 other courses, including the Smart Money Zone course, in our course library. All of those are free. And if you decide that you want to trade with me every single day, get access to our Discord community, all my trading bots, as well as every trade that I make, the link to our private mentorship group is down in the description. Thank you for all your support, and I'll see you next time.